Hey everybody, I wanted to talk about a topic that gets asked almost every single time a client calls up for private home care services for our services on Minute Women. When we get a call from a prospective client, usually during the course of that first 10, 15 minutes of services, the big question that comes up, which is the reason you found this video, is who pays for private home care? And so most of the time, families are hoping we're going to be able to say, oh, we're covered under some medical insurance or health insurance or under CMS. And unfortunately, I'll cut to the chase is that private home care is not covered under health insurance and it is not covered under any CMS, being Medicare or Medicaid. Typically, the two most common ways that people pay for private home care, and Minute Women, our agency, my agency, provides specialty private home care, dementia specialty care, but we are still under the umbrella of private home care. The two ways that people pay for private home care is out of pocket or through long-term care insurance. Now, when you get into the senior care world, it is typically not a question of how much, it's not a question of if this is going to cost a lot of money. It's a question of how much money is this going to cost. None of these options are inexpensive. In Massachusetts right now through Genworth's cost of care tool, the average cost of an hour of private home care is $41 or $42 per hour. Assisted living companies can range depending on the quality of the building, and there's some more blue collar assisted livings, there are high end assisted livings, but they can range anywhere. And if you include memory care as well, they can range anywhere from $6,000 to $9,000 for traditional home care, and $9,000 to $15,000, $16,000 a month for memory care. So it's going to be expensive. And then with nursing homes, that can be $15,000, $20,000 a month out of pocket for a nursing home. So it gets expensive very quickly, and that's why I say it's more of a matter of how much it's going to cost, because all of these services are expensive. And that very quickly opens up the conversation about kind of the donut hole, as we call it. You have the people at the top of the donut that have the money to be able to pay out of pocket for these services, and then you have people at the bottom of the donut that are low income, so they can be covered under Medicaid, or in Massachusetts, it's Mass Health through ASAP programs. And then, of course, that donut hole continues to get bigger and bigger of the people that make too much to qualify for Medicaid or Mass Health, but don't have enough assets to be able to pay out of pocket for private home care services. Or maybe they can pay out of pocket for a month or two, but it's not something that is going to be a ongoing solution that they can afford. And that's a big macro problem that we're having in the United States of the rich versus the poor, and I'm not here to step on that third rail, but the point of this video is to talk about how private pay services are paid for. So the number one way that our clients pay for private home care services and dementia specialty services is out of pocket. Typically, the person that's calling us up is the adult daughter, or the daughter or son that lives geographically closest, whoever's the primary family caregiver, and they are also doing a lot of the work for caring for their loved ones. And usually what we find, it falls primarily, the majority of it falls on one person, and that one person is typically the oldest daughter. And so when they kind of reach their breaking point between having responsibilities at their own home with their own children, their own spouse, their work responsibilities, and then on top of that, their hobbies, enjoying getting out, to do vacations or to enjoy the weekends, something eventually breaks where there's just too much pulling at them and something's got to give. And so that's when those kind of calls come in where they're saying, hey, we're exploring what our options are. And so typically the adult daughter has access to their parents' money in some way. They're on a shared bank account or their power of attorney, and they can pay for these services out of their parents' funds, whether that's the retirements they have, whether it's savings they have, And what's becoming popular is reverse mortgages. They're becoming extremely popular again, and we're having more and more clients that are paying for services through reverse mortgages. And so that is typically how it is. Private home care is a service for payment business, much like a housekeeper would be or a landscaper would be. It is a service-based business that we provide services, and typically families provide payment. One other way that private home care can be paid for is through long-term care insurance, and that is typically a reimbursement model. Some families do want to assign benefits to a private home care company, meaning that we can basically send the paperwork in directly to the long-term care insurance company, and then they send us payment directly without having the family be the middleman, if you will. But that doesn't happen too often. Usually the family still wants to be involved, and they're taking the documentation, reviewing it, and then sending it in for reimbursement to the long-term care insurance company. A quick history of long-term care insurance, for those that want to know. In the 90s, early 2000s, there were a ton of 80s as well, 80s, 90s, early 2000s. There were a lot of insurance companies that were selling long-term care insurance policies, and they underestimated their risk. And they sold policies to hundreds of thousands of people. And the way that long-term care insurance works, like any insurance, you pay a monthly premium, and then when you need the coverage of the insurance, then you file a claim, and then they start reimbursing you for your car, your house, your health, or in this case for long-term care insurance. Where the long-term care insurance companies made huge mistakes is they really didn't charge the right amount for long-term care insurance. So then when families did activate those insurance policies, these insurance companies lost their shirt because they were paying for services well beyond what was paid in for that policy, which made the long-term care insurance industry shrink dramatically. And there's a lot of horror stories about what happened. You can find out about it if you Google it. But essentially, insurance companies were caught over their skis, and they were paying a lot of money for long-term care that they never thought they were going to be paying for. As long-term care went up dramatically, the cost of it went up, and people kept living longer and longer and longer. So that meant that the industry shrunk, and right now there's somewhere between 10, maybe 15 long-term care insurance companies that provide long-term care insurance. And if you explore that option for insurance, it's typically going to be very expensive, and it's not going to be inexpensive or cheap. So what ends up happening with long-term care insurance is that they will pay that benefit out. Now, I won't say there are problems with long-term care insurance, but some of the hurdles to get over this is one, long-term care insurance requires some paperwork. They want to make sure that you're working with a reputable agency that's a real business. They want a certain minimum of ADLs, activities of daily living, being done. So we're helping out with personal care. The person has dementia and they need help with meal preparation. Or they're a fall risk as well. The more ADLs they need assistance with, the more likely your policy is going to be activated. If you only need help with one ADL, more than likely a long-term care insurance company is going to say they don't qualify and there need to be more ADLs. The second hurdle you have to get over is that there is typically a elimination period, and this can change just like the ADL requirements. It can change policy to policy. The less ADLs you need, and the lower elimination period, that means the monthly premium is going to go up. So, and just like anything, just like car insurance, if your deductible's higher, your monthly premium goes down. And the elimination period is typically it's 90 days, but it can be immediate. It can be 30 days, 60 days, 90 days with insurance. You can customize it to whatever you want for the most part, and then they just spit out a monthly premium that it's going to cost. And that elimination period is the time in which you have to pay out of pocket for services before the benefit kicks in. So whether you're looking at private home care, whether you're looking at assisted livings, or you're looking at nursing homes, you're going to have to pay out of pocket for that elimination period for that benefit to kick in. And then once that elimination period is paid, they will start reimbursing for care. There are, I'm sure, a ton of different caveats for this, but these are the big ones that we think you should know about and that we've experienced ourselves with our clients that have long-term care insurance. The other one that you have to be aware of is the maximum daily benefit. So when you sign on the dotted line for your insurance policy, there's going to be a maximum daily benefit. Again, some of those can go up with inflation or some of them stay static. But as health costs go up, as private home care rates go up, that means you're going to be getting less for the money, right? And so let's say in total, and I'll use just hours of this. Let's say the amount of your maximum daily budget will allow you to get 8 hours a day of care, 5 days a week. So a total of 40 hours over the week. And then with that 8 hours, it hits that maximum daily payout. Then you would have to make the decision of, hey, are we going to stay at just 40 hours a week? And that's fine. And if that's all mom or dad needs, that's great. Or if they need less, then the benefit will cover that. But if somebody needs more than that, then it reverts back to option one, which means you're going to have to pay out of pocket. So typically, if somebody needs care Monday through Friday, 8 hours a day, then you kind of wonder what's going on Saturday and Sunday. Who's picking that time up? And that means either a family's going to have to pay out of pocket for that to the private home care company, or they're going to have to do those services themselves, right? The family caregiver, the primary family caregiver is going to say, hey, if I can get these days off, I'll go in and care for mom or dad on the weekends or whatever the schedule is going to be. So just think about those things, and those are important kind of caveats to know about long-term care insurance. It is, if you have it, it's absolutely a benefit you should use for private home care or assisted livings or nursing homes. But there are some hurdles to overcome to activate those benefits, and then just understand what your maximum benefit is per day, and do your best to stay in that, because if you go over it, then you're going to have to pay for that care out of pocket. And so typically what happens is the family says, hey, our maximum benefit allows us 8 hours a day, 5 days a week. We provide that care. The family pays us. We give them the paperwork. They provide it to the insurance company, and then the insurance company reimburses the family for the care that was provided. And so those are the two big ways that private home care services are paid for. There certainly are Medicaid. There certainly are veterans benefits, like veterans aided attendance. That's a whole nother video that we can talk about. But we just don't have a lot of people that are using veterans aid and attendance for the private home care services for various reasons. Most of our clients are paying out of pocket, or they have a long-term care insurance policy that helps supplement the care or pays for the care totally. So those are the two big ways that people pay for private home care services.